Welcome to the Crypto Layer HQ. Today we will be discussing interest rates, inflation, and unemployment, and how this affects Bitcoin and the overall markets. So if we first take a look at US interest rates, we can see in March 2022, interest rates started to increase. And the reason the Fed was increasing interest rates was because inflation was increasing. We can see by the time they realized they needed to start increasing interest rates, inflation was already at 4.7%, and they realized they had to do something to get things under control. Inflation eventually went all the way up to 7% plus, and we can see the entire time inflation kept increasing and the Fed had to keep increasing interest rates. Markets, including Bitcoin, are very forward looking. So we can see Bitcoin had already put in a top in November 2021. And this was probably in anticipation that the Fed was going to have to start increasing interest rates. And this would be bad for risk on assets, since markets already knew inflation was most likely going to get out of control and the Fed was going to need to start hiking rates, which would be very bad for Bitcoin and other risk on assets. That's why we can see Bitcoin started to decline, as it was expecting this to happen. And by the time Bitcoin was at the low, it had already priced in this move. And we can see once Bitcoin's low was in, interest rates were near where they were going to top, and even inflation was near the top. And you might be wondering, why was Bitcoin going into a bull market when interest rates were so high and inflation was high? Since high interest rates isn't a good thing for Bitcoin and risk on assets. So the same way Bitcoin was forward looking and started to decline because interest rates were going to increase, I believe the same thing happened here, where Bitcoin was already anticipating that inflation was going to go away and the Fed was going to start cutting interest rates into the future. So Bitcoin started to rise as it was forward looking, expecting interest rates to eventually cut. And we can see interest rates eventually did start to cut in August of 2024. Interest rates started to go down from 5.5 and we started to finally get some cuts. And now we're all the way at 3.75. A lot of people are wondering, why is Bitcoin crashing when interest rates are lower now and going down? Why were we in a bull run when interest rates were increasing? And it's the same reason I mentioned the last two times, because Bitcoin is forward looking and it already priced in and expected that the Fed isn't going to be able to cut interest rates much more in the future. So there isn't much to look forward to in terms of rate cuts. If we look at FedWatch, we can see that markets aren't expecting interest rates to cut much in the near future. We can see it's expecting rates to stay at 3% all the way to end of 2027 even, where it's expecting potentially one or two more 25 basis rate cuts this year. But we can see it's a very small amount of rate cuts that are going to happen in 2026 and even into late 2027. So Bitcoin is already anticipating that the Fed isn't going to be able to cut rates. So there isn't much of a reason for Bitcoin to be rallying and continuing higher. And now the next question might be, why won't the Fed cut interest rates since inflation is now back down? And the reason for that is inflation is still at 3%, so it is still above their target of 2%. The Fed wants inflation to be at 2% before they feel comfortable cutting rates significantly. And since inflation has now been for an extended amount of time around the 3% region, they don't want to take any risks in cutting interest rates too much, and then we start to get a second wave of inflation. Also, unemployment is staying relatively low, which means when employment is low, it means a lot of people have jobs. Therefore, there's no reason for inflation to go significantly lower since people have income and they're going out and spending money on things. So inflation is going to stay at 3%, making it hard for the Fed to cut rates. Another reason the Fed isn't under much pressure to cut interest rates is also the overall market. If we take a look at the S&P, the Fed oftentimes cut rates if we get a big crash in the S&P. We can see that happened back in 2000 when we got the dot-com bubble and the S&P went into a big bear market, and this was essentially a recession. So the Fed had to cut interest rates to help the markets eventually recover. And then the same thing happened in 2008 when we had the financial crisis. Markets also crashed, and the Fed had to cut interest rates to help with the markets. And of course, we know same thing happened during COVID when markets crashed in February, March of 2020. It was a very quick and violent crash. So the Fed had to, again, cut interest rates all the way down to zero to help the markets recover. But since right now, the S&P is at all-time highs, inflation is at 3%, and unemployment is still under control, there is no reason for the Fed to start aggressively cutting interest rates. If the S&P does get a significant pullback of, let's say we pull back 12%, or even if we retest the low back in April of 2025, that would be a 30% pullback, and even retest the high of December, January 2022, this would definitely give the Fed a reason to cut rates, since such a large market crash would also make inflation go down. And oftentimes when markets crash that much, it means companies have less money to keep people employed, and they often cut lots of jobs, which could also result in unemployment starting to go up, which will further make CPI go down to their 2% target, which could allow the Fed to cut interest rates. But right now we are in a position where there is no reason for the Fed to significantly cut interest rates, since the S&P is at all-time highs, inflation is still at 3%, and unemployment is still reasonably under control. For all those reasons, we're probably going to see interest rates stay above 3% in 2026, unless we get a large market correction, which can definitely happen. If we take a look at Bitcoin, it might take some time for it to eventually find a bottom in 2026, let's say potentially in the 40s to 50s, or to know where the exact bottom will be. But eventually, if the S&P gets a correction and the Fed is able to cut interest rates some more, let's say under 3%, if we're lucky, then the S&P and even Bitcoin could eventually be in a more risk-on environment, and that could allow Bitcoin to eventually start to trend upwards in 2027 when interest rates are lower, and hopefully CPI is also under control so that interest rates can stay lower for a extended period of time, as this helps risk-on assets such as Bitcoin.